Hello everyone, I am Trupti Pandya and today I will be teaching you Element of Account, Standard 11, Part 2, Chapter 4, Bills of Exchange. Let us start Chapter number 4, Bills of Exchange. Introduction. Generally, there are two types of financial transaction in any types of business. First, cash transactions and second, credit transactions. Cash transactions are those transactions where there is an immediate give or take of cash. It means cash payment is on the spot. As example, cash purchase transactions, cash sales transaction, etc. Credit transactions are those transactions where cash is not paid immediately. It means cash not paid on the spot, but it is payable during a specific period subject to the conditions agreed at the time of the transaction. As an example, credit purchase transactions, credit sales transactions, etc. In such transactions, the payment of the amount depends on the credit period. The credit period depends on the type of business, current situation, mutual understanding and conditions of the opposite party and the amount of the transaction. In present times, with the increase in the number and size of the business, the number of credit transactions and its importance are also increasing day by day. So, cutthroat competition is there in the business, and so credit transactions are also increased day by day. If the payment of the amount of goods given in credit is not received on time, many times businessmen have to face financial problems and it is also affected on their other transactions. If on the time if money is not received, at that time cash crisis faces by the businessman, and so it affected on the other transactions also. Hence, each businessman wishes to receive the amount of a credit transaction in time. To maintain the financial liquidity, normally businessman uses a document through which the person from whom an amount is receivable accepts his debts in writing and states the time of payment of the amount, or accept to pay at the time stated in the document. If the debtor fails to pay the amount, this document can be used as a written evidence of the dues. In this way, the documents which are used are of two types. First is bills of exchange and second promissory notes. If a payment is there, at that time debtor gave the promise for the payment of this amount. It is called promissory note. And bills of exchange, one is a drawer and one is a drawee. Now, meaning and definition of bill of exchange. The definition of bill of exchange as per Indian Negotiable Instrument Act 18,081 is as follows. A bill of exchange is an instrument in writing containing an unconditional order signed by the drawer directing a certain person to pay a certain sum of money only at a specified time to a certain person, or according to his order or to the holder of the instrument. Bill of exchange is also called letter of exchange. Now, third point, characteristics of bills of exchange. Whether any bill is acceptable legally or not, it can be known from its characteristics or essential elements. First, in writing. A bill must be in writing So an oral order cannot be called a bill. Second, unconditional order. The order made in the bill must be unconditional. This means there should not be any condition for the payment of money. This order should not in the form of request. Third, specific person. The bill must be addressed to a specific person. Fourth one, bill acceptor and amount receiver. In a bill, the bill acceptor and amount receiver both are separate persons. Therefore, their name must be clear and both should be specific persons. Fifth one, order for the payment. The order must only be for the payment of Indian money, not for a product or consideration of money. Sixth one, definite amount. The amount shown in the bill must be clear and definite. Seventh one, clear date. The date of writing the bill must be clear. Eighth one, definite duration. The duration of the bill must be definite. Ninth one, signature of the person. The bill must contain the signature of the person who is writing, means drawing the bill. The writer of the bill is called the drawer of the bill. 10th one, revenue stamp. Revenue means adhesive stamp of the prescribed amount must be affixed on the bill depending on the amount of the bill. 11th, on demand or after specified time. The payment of the bill is done on the demand of the drawer or after the specified time. 12. Acceptance of the bill. The bill becomes operative only after it is accepted by the person on whom it is drawn. Now, fourth point, different parties in a bill of exchange. There are three parties in bill of exchange. First, drawer of the bill. Generally, he is the creditor or the trader selling the goods. Here, who draw the bill? Generally, trader who sells his goods and sells goods on credit. At that time, it is called creditor. So he is a creditor, means a trader who sells his goods on credit. Second person, acceptor of the bill. Generally, he is a debtor because he received the goods on credit, means purchased the goods on credit. Generally, he is a debtor or the customer purchasing the goods. Here, drawer is the trader selling the goods on credit and acceptor who is the customer purchasing the goods on credit. So, purchase the goods on credit, it is debtor, and who sells the goods on credit, it is a creditor. Pay of the bill. Generally, he is the drawer of the bill or the person who is going to receive the money or the person who holds the bill. Here, drawer draw the bill, acceptor accept the bill, make a sign, and afterward return this bill to drawer. It means drawer hold this bill and receive the payment from the acceptor of the bill. So, in some situations, when the drawer and the payee both are the same, then there are only two parties, drawer and payee, holder of the bill. Second, acceptor of the bill. Normally, a bill is drawn by creditor on his debtor, which is accepted by the debtor and returned back to his creditor. It means drawer draw the bill and give the debtors. Debtor accept the bill, so he is the acceptor, and afterward make the sign on the bill and return it to drawer. It means return to creditor. So two parties are there, drawer and acceptor. So here, which is accepted by the debtor and returned back to his creditor. Now fifth point, specimen of a bill of exchange. Here, this type of bill is there. Here it is Mitra Milan Society, Narayanpura, Ahmedabad 13. Date is written on which date this bill is written, 9/8/2016. And how much rupees is that? How many amount is that? Rupees 10,000. For the value received by you, pay rupees 10,000 only to Ritesh or as per his order after 3 months. Here time period is also given, rupees is also given, rupees in number means in digit and in word also it is given. And to whom the payment is there and what is the time period from today. To Sri Dhaval, Sargam Flat, Jodhpur, Ahmedabad. Dhaval, signature of the acceptor. Here Dhaval make the signature. Signature of a drawer. Here Kavis. Kavis is the drawer and Dhaval is the acceptor. Dhaval make the sign and here drawer also make the sign. And here attach the revenue stamp. Here stick the revenue stamp on this bill. So this is the specimen of bill of exchange. Now, from the above specimen of bill of exchange, understand the detail of the bill. First, definite person. In the bill, each person must be definite individuals. Here, Kavish is a drawer while Dhaval is an acceptor and Ritesh is a receiver. It means here money received by Ritesh. Dhaval accept to make the payment. And here Kavish drew the bill. So Kavish is a trader, Dhaval is the customer and Ritesh is the receiver of the money. Second, amount. The amount payable by the acceptor must be clearly shown in the bill. In the specimen, the amount is shown both in figure and words, 10,000 rupees. Date. The date on which the bill is drawn is shown in the bill. In the specimen, the date of the bill is 9/8/2016. Period. The period after which the amount is payable, that period must be shown clearly in the bill. In the specimen given above, the period is 3 months. Now, fifth one, signature. The bill must contain the signature of two persons, the drawer and the acceptor. In the specimen, the signature of Kavish as the drawer of the bill and the signature of Dhaval as the acceptor of the bill. Sixth one, revenue stamp. In order to recognize a bill legally, it is necessary to affix a revenue stamp in the proportion of the amount of the bill. A document without a revenue stamp cannot be considered legal. If you stick the revenue stamp, then only this document become the legal. So if you want to consider this document a legal document, give the legal name, then revenue stamp is very necessary. Sixth, meaning and definition of promissory note. Generally, a creditor draws a bill on his debtor for receiving his dues. Along with a bill, another document is also used for settling the documents. This document is known as a promissory note. In a promissory note, a person who has to pay an amount to another person himself gives a written promise to pay the amount. This means a debtor himself gives a written promise to the creditor to pay the amount. This promise document is known as a promissory note. The definition of a promissory note as per the Indian Negotiable Instrument Act 1881 is as follows. A promissory note is an instrument in writing containing an unconditional undertaking signed by the drawer to pay a certain sum of money only at a specified time to a certain person or according to his order or to the holder of the instrument. Now, characteristics of promissory note. In writing. A promissory note must be in writing. So, an oral promise cannot be called a promissory note. Certain amount. The promissory note must contain a promise to pay certain amount. Third, definite and clear. The amount shown on promissory note must be definite and clear. Fourth, promise to pay money only. The promissory note must contain a promise to pay money only, not a product or consideration of money. Fifth point, unconditional promise. The promise to pay money made in the promissory note must be unconditional. Sixth, drawer's signature. The promissory note must be drawn by a definite person and the drawer must put his signature on it. Seventh, period and time. The duration of the promissory note and the date of making the promissory note must be clearly stated. Eighth one, revenue stamp. Revenue stamp of the prescribed amount must be affixed on the promissory note. It is very necessary. By jointly. Ninth point. A promissory note can be drawn jointly by more than one person. In this case, each person becomes jointly and individually responsible for making the payment. Now, 8th point, different parties of promissory note. Generally, there are two parties to a promissory note. First, drawer or maker of the promissory note. Generally, he is a debtor. Payee or person receiving the money. Generally, he is the creditor of or the holder of the promissory note. Now, specimen of promissory note. Shop number 21, Akshat Flat, Bhuyang Dev, Ahmedabad. Date 21 January 2016. Rupees 12,000. I promise to pay rupees 12,000 only to Sanjay Bhai Patel or as per his order after 2 months from today for the value received. To Sanjay Bhai Patel, Ranip, Ahmedabad. Revenue step, Suresh Patel. Here, Suresh Patel give the promise to Sanjay Patel to after 2 months the payment of rupees 12,000. So this is the promissory note. From above specimen of promissory note, understand the detail of the promissory note. Definite person. Drawer of the promissory note and receiver of the amount must be definite person in the promissory note. Here Suresh Patel is drawer and Sanjay Bhai Patel is receiver. Date. Generally the date on which the promissory note is made drawn, the same date is to be shown on the note. Here date of promissory note drawn 21st January 2016. Amount. The amount payable by the maker should be clearly stated in the promissory note. Here rupees 12,000 is shown both in figure and word. Period. The period after which the amount is payable should be clearly shown in the promissory note. In the specimen, the period of promissory note is 2 months. Signature. It is necessary that the promissory note is signed by its maker in order to make the note a legally valid document. In the specimen, Suresh Patel is the maker of the promissory note, so his signature on the note is essential. 6.1 Revenue Stamp. In order to recognize a promissory note legally, it is necessary to affix a revenue stamp in the proportion of the amount of the note. A document without a revenue stamp cannot be considered legal. So, like bills of exchange, on the promissory note also, revenue stamp is very necessary. Otherwise, it is not considered as a legal document. Now, 10th one, difference between bills of exchange and promissory note. What is the difference between bills of exchange and promissory note? Order or promise. A bill of exchange is an unconditional order to pay money. A promissory note is an unconditional promise to pay money. Here order, here promise. Who draws on whom? A bill is drawn by creditor on his debtor. A promissory note made by debtor and sent to his creditor. Third, parties. There are 3 parties to a bill: drawer of the bill, acceptor of bill, and receiver of money. There are 2 parties to a promissory note: maker of note and receiver of the money. Fourth point, need for acceptance. A bill does not become operative unless it is accepted by the person on whom it is drawn. There is no need for acceptance of a promissory note as it is made by the debtor himself. Responsibility of a payment. The acceptor of a bill is responsible for making the payment if the acceptor becomes insolvent. Then in case of bill endorsed, the drawer may also become liable. Responsibility to pay the amount of the promissory note is that of the drawer. Day of grace. 3 days of grace are allowed after the period of bill to pay the amount. No days of grace are allowed in case of promissory note. Dishonor. When the acceptor of a bill fails to pay the money on the maturity date, it is known as a dishonor of a bill. Notice to be issued in case of dishonor of the bill. There is no need of notice for the dishonor of a promissory note. Accommodation bills. There can be accommodation bills. There are no accommodation promissory notes. Condition. Any common person or trader can draw a bill with the condition payment to bearer on demand. Only the Reserve Bank of India can issue a promissory note with the condition payable to bearer on demand. As example, currency note. Thank you very much.